We have a follow-up to a story that we brought you last night. Mixed results from Twitter's first ever quarterly earnings report. Twitter earned more money than forecast, but it reported a sharp slowdown in new user growth, which was less than expected. That spooked investors, and the stock plunged today, down 24%, closing at $50 and change. Still, Twitter shares are nearly double November's initial public offering price of $26. Bill?
And our next guest has doubts about the future of Twitter at this point. He's Ben Schachter, senior internet analyst at Macquarie Research. And Ben, you downgraded your view of Twitter in December before all of this. What were you looking at that time?
Well, the stock had really just run too far, too fast. It was when the stock was actually at its all-time high of about 73. And we simply felt like the stock had gotten away from itself and still had a lot to prove. And I think this quarter sort of it showed us that it really does still have a lot to prove.
So, Ben, what everybody was focusing in on in yesterday's report was that the number of new users just wasn't as much as they were expecting. It was puny. But, you know, when you talk to most people, I'm just talking average people about Twitter, they're not thinking about signing up and having a Twitter account and sending out messages. Is that what the problem is, that people just can't relate to it? And if so, what can Twitter do about that?
Yeah, I think that's absolutely correct. The real problem here is this going to turn into a mass market product or not? They're able to monetize their users very well. They did have some positive metrics in the quarter, but the fact is new users are not signing up. And it's a very big surprise given that the IPO happened so recently. People thought that the IPO, the publicity around it, would really drive a lot of positive steps for the company, and we just didn't see that materialize in the quarter.
CEO Dick Costolo, after the earnings report, admitted they need to come up with a better Twitter. What would that look like?
You know, I think the reality is it looks a lot like Facebook. It's just much more accessible. It enables people from all sorts of walks of life and all demographics to really get in, understand what it is, and begin to use it in a way that they're very comfortable using. Right now, it's fairly complicated. It's complex to use this thing, so it's really, I think, limiting the growth of the new users.
All right. So how do you feel about the stock now? I mean, at $50, is it a buy, or at what price would you be recommending it?
Well, listen, we still have a $46 target. I think there's a lot of optionality left for the company. It's obviously very early stages. And the truth is, if they can turn around that usage, the metric there, and really start to grow users, there could potentially be a lot of upside here. The issue is not the fundamentals of the business. I think Twitter and Facebook are both showing that there's a very large appetite for advertising on these kinds of platforms, but they simply must get more users there.
You know, you look at the other social media companies and the stutter steps they've made. Facebook, there were questions about its ability to adapt to mobility out there. They seem to start doing that right now. Is Twitter just in that awkward phase where they're trying to find their niche and their way down the road? And are you hopeful that they will be able to do that?
Yeah, listen, I'd say I'm cautiously optimistic that they can turn things around. If you look at the report from last night, it was really very mixed. On the one hand, you had very strong monetization growth. You had the revenue per user going up. However, you just didn't have enough users. If they can turn that around, it shows that they can make a lot of money per user. They just need to grow the users. So it's a relatively simple issue. The question is, there's not a simple fix, and there's not a lot of visibility to the fix. And given that it was such a new IPO, I think the real problem here is that the market does not like to be surprised when a company has run as far and as fast as Twitter had.
Yeah, clearly there were high expectations for that were not met last night, that's for sure. Ben Schachter, senior internet analyst at Macquarie Research. Thanks for joining us tonight, Ben.
Thank you.